Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsarthi. And there is money shortage in the banking system. And this is leading RBI to carry out a lot of money market tools that can increase the liquidity in the banking system. But the reason for this shortage of liquidity in the banking system is due to the fact that the government is having a lot of surplus funds. And because of the elections that is going on, this government spending will be delayed by at least 2 to 3 months till the election results are declared and the new budget is finalized. So that is going to keep liquidity tight in the system. And what do you mean by liquidity tight in the system is that the banks have to borrow from the central bank to make sure that they are keeping all their reserve requirements, like the cash reserve ratio. And for this, the RBI is also undertaking many operations. They have done an auction for a repo for about 125,000 crores last week. And also the government is also doing its bit. They are buying back government bonds. They have announced an auction for 60,000 crores again this week. And but having said that, the banks are not really giving the government the bonds at the yields the government want. Banks are searching for higher prices on the bonds they sell to the government. So, so in this, the way the market is working at this point of time is because of the government running cash surplus. The GST collections have been very good, and the elections are keeping the government from spending all the money they are collecting, and so this is leading to a temporary shortage of funds in the system. So this is also leading to the short that is money market, that is yields on treasury bills, that is the Government of India Treasury short-term money market instruments, and other instruments like commercial papers and certificate of deposits of banks at slightly higher levels, because market is demanding a higher price for higher yield for giving like short-term liquidity to issuers, including government and corporates. Now, this situation is likely to ease in the next 3 months once the government election is over and the government is starting to spend post July. Once the election results will come out next month, and the budget, new budget, full year budget of the government, elected government, will come out in July, and that should then start to lead to higher spending by the government, and that will lead to again the liquidity money coming back into the system. There could be a surplus funds actually at that point of time. In this also, June is also a month of advance tax payments, so that could exacerbate the liquidity in the system, shortage of liquidity in the system. And RBI is expected to carry out more liquidity operations to ease the liquidity shortage. So till at least June end and beginning of July, we can see short-term rates at higher levels. But post that, short-term rates are going to drop substantially, as there could be surplus liquidity in the system. And if there is more foreign flows coming into India, and there is structural improvement in liquidity, then you are going to see a situation where yields are going to drop substantially at the short end of the curve. So investors would be looking to invest can take positions in 3 to 6 months or even 1 year kind of bonds at higher attractive level, and as these yields are likely to fall in the next couple of months post July. Thank you very much for listening in. And if you are a financial advisor, the best place for you to uh, provide your clients the best risk return profile on their fixed income investments is INR Bonds Partner Portal. Take a look at all the offerings INR Bonds has on the various instruments available for investors, including short-term bonds, long-term bonds, medium-term bonds of different ratings and different ratings and different deals. Investors can choose, advisors can then construct the best portfolio for their investors. Do follow us on all podcast channels. And once again, thank you for listening in.